Hey, you guys, Sandy Hibbard here with the Insiders, and welcome to our podcast today. Mark and I are bringing you a special report from the Insiders on real estate and marketing. And today we're going to dive deep into a new report requirement for real estate. And we've got a special guest here, Miss Autumn Bane from Secure Title of Texas. And we're going to dive deep into a new requirement called FinCEN, FINCEN. And most of you may not have heard about this. This is brand new. It takes effect March 1st. So Mark felt like this would be a good opportunity for us to jump in today and get all the necessary information that you are going to need in order to comply to this new requirement. So realtors, mortgage lenders, title people, listen up. We've got a lot of great information here for you today. But first, we got to catch up on the market with Mr. Moore. How are you today?
I'm doing good, other than clearing my throat every 22 seconds. So
Cedar fever.
Cedar fever. Yeah, doing well. We just hard to believe it's already March and we're dancing into the first quarter. It just is just crazy. But we've been on a little bit of a growth pattern. There's two pathways for us. One is through the direct operations, and the other is through our fee attorney network. And I've had a great opportunity to add two really good fee attorneys.
I was going to say, I think then you opened a couple of new offices.
Yeah, well, we opened Flower Mound, but that was late last summer.
Right.
But these are two additions. I've added Fawn Doster, who is a 35 years in the Denton market, practicing real estate law, probate, estate planning, and so forth. And she's just come on board with us from another company. And then we just added Darren Stanton and Tracy Witt, who were with Independence, and they're down on Zang Boulevard.
Wow, in Dallas.
Yeah, and he's been down there for 31 years, and he's a closing attorney.
I think you don't have another Dallas office.
No,
that's fantastic.
Yeah, yeah.
Okay.
So, and they're a big office. I'm really excited, and we've gotten them onboarded.
Super.
Started with us, so a little bit of expansion on that side. Commercials coming out of the gate strong again.
Great.
Andy Phillips will close close to $70 million this month in commercial transactions. So I see that market still being very.
Just out of curiosity, what drives that commercial market?
Well, I mean, it's all demand driven, and these particular closings we're doing, in fact, all three of them are HUD multifamily, so they're new developments.
Okay.
Yeah. So that demand is still out there. Retail's very, very strong, industrial strong, and office is still the spotty side. In fact, where you're seeing some postings of foreclosures, and actual foreclosures have been in the office market. Not rampant, but there's
what about retail?
Retail is probably the strongest of any asset class.
Oh, fantastic.
Yeah, and leasing, Collin County, and I'm sure it'd be metro-wide, is probably 96% occupancy.
Okay.
So that'll stimulate further retail development side and trade side.
We need that.
Yeah. So, and that, as you would know, that's all pushing up north to that side. So anyhow, with that kind of combated what we're going to talk about with FinCEN, which became effective March 1, our rate reduction, Texas Department of Insurance became effective March 1, 6.2% reduction in our rates, which none of us wanted, and we don't think they should have been adjusted, but it was kind of like the last mark of the Commissioner of Insurance, and then she
behind that
political, and then she retires.
Oh, bro.
Yeah. So, so anyhow, we'll be fine to that.
Now, what about mortgage rates?
Mortgage rates are, if you get into jumbos, I saw were under 6 with 20% down. I think the overall rates are somewhere right at 6% or just slightly above, but we're not at a 30-year non-conforming at 5.5%. Possibly could head that direction, but we're not there yet. So So anyhow, that's kind of the gist of it. So the good news today is I didn't have to bring any notes, write any notes, because I have my expert sitting next to me.
Yes, because Autumn is here.
Yeah, and so Autumn is a senior vice president in our company. She's our escrow operations manager. She has a lot of responsibilities corporately within the company. In addition to that, she runs a very large branch for us in Frisco with her Investor Core business that she does. So she's an expert. She's highly credentialed in the Texas Department of Insurance side with her educational side. So she's just a great lead. And so she's leading us to the new horizon with some new software that we're going to implement.
Oh, cool. You talked about that in our last podcast.
Called Settler. And then she's leading the initiation of the FinCEN. And then we've also putting together or signing up with a group called Certified for Mortgage Fraud Protection as well. And she'll talk a little bit about that. So without that further ado, I'm going to turn it over to you and Autumn and let you guys kind of go through the dialogue.
Awesome. Well, I think the first thing that we need to know is, what is this? So let's talk about FinCEN and tell me, what is it?
Well, FinCEN was created by the U.S. Treasury, and it's the Financial Crimes Division. And so they saw a need over time where they saw money laundering was happening either through cartels, foreign persons, or people who were using companies, LLCs, even trusts as shills, sort of, and they were hiding behind them. So they weren't able to catch up with those people in order to, catch them. And so they were trying to find ways that they can narrow down who those people are and try and stop that, because by them doing that, it actually has a negative impact on natural persons, being your normal buyer and seller who want to get into the market, buyers who want to buy their homes, sellers who want to sell their homes, sellers, of course, coming across people who are not bona fide buyers, or they are, but it's dirty money. And then also creating undue competition for buyers. When you've got people who are competing for homes, they come in extremely low and they can't, or they come in extremely high, and they can't beat those contracts. But unfortunately, the money behind them is dirty. So it's sort of a double impact. It's taking care of dirty money that's being laundered, but it's also protecting the real estate market in the United States so that the normal John and Jane Doe who want to buy a house have the ability to do so without being hamstringed by dirty money.
Do we really see a lot of that here in DFW?
You see it nationwide.
Yeah.
Originally.
So this isn't a Texas thing.
No.
Okay. This is a national.
No, this is a national thing. And it's actually been in place for a while, but we were operating under what's called a GTO, or a geographical targeting order. And it only applied to 7 counties in the state of Texas. And then there's other counties across the country, of course. But for Texas specifically, we only had 7 counties. And at one point in time, it was only if it was cash, it was only if it was an entity, and it was only if it was $300,000 or more. So now they've done away with the geographic targeting orders, and they've now come into the real estate report. Now, it doesn't matter what county it's in. It doesn't matter what the cost is, even if it's a gratuitous transfer. So let's say you're going to gift it to someone and no money is changing hands. If it's going to a trust or an entity, it still has to be reported. So it's not based on money anymore.
Wow.
Yeah.
So then in all of that, what is the change that we're looking at that has actually come into effect that realtors or title companies and brokers need to take note of as of March 1st?
Well, the biggest change is that it's every county now. So it's not just 7. So it's going to apply to way more than it used to. It's also not contingent upon the consideration. So now it doesn't matter the monetary value. If there's one at all, it still has to be reported. But I think the biggest change is that it used to be cash only. And now they have opened it up and said that if it is a private money lender, seller financing, or hard money, then those also have to be reported. And a lot of people say, well, what is the, what constitutes hard money? What constitutes a private lender? And so they have actually come out and said, if it's a lender that does not partake in the Bank Secrecy Act, and they are not required to do anti-money laundering or suspicious activity reports, SARs. If they don't do those already, then they're going to be required to report FinCEN. Now, most of your major banks, credit unions, those kind of things are going to be AML lenders, what we call anti-money laundering lenders. And so now we're just looking at private lenders, people who are using their 401k. They're using those as an investment opportunity to lend money,
Right.
and then hard money lenders.
Wow. I mean, who does this fall on to watch out for all this stuff? It sounds so detailed to me and so technical. How is just your typical realtor and buyer and seller going to know what to look for?
Well, as far as reporting is
Yeah.
concerned, if a title company is involved,
Mhm.
DDI has decided that, or I should say the Treasury has decided
Right.
that title companies will be the ones who will be responsible for reporting.
Okay.
Now, if you have someone who goes and they exchange property outside of a title company and they do it without title insurance, and let's say it's just a buyer and a seller together, then together they have to decide who's going to report, but somebody has to do
Wow.
it.
So
Yeah.
buyers then need to, what do they expect in regard to reporting? How does a buyer get involved in that?
Then they would have to go into the FinCEN website and they would actually have to report it. But we're hoping you're going to have a title company involved. So it's a neutral third party who's helping with you maintain the money. We're also maintaining whether or not the contracts were followed. And you're also getting title insurance to protect your investment. So we, of course, encourage them to do that instead of doing it outside of title. But of course, sometimes people like their fees for that.
Now, on the closing statement, is there going to be an additional fee for this that the buyer or the seller has
I think
to
you'll see it
pay?
within the industry. At this moment in time, we're opting not to charge a fee, and only because we think we can navigate it within the company and report directly to FinCEN. But if that becomes more of a challenge by virtue of nothing else than a comment to volume, then we might redirect into one of the other sites that are out there that title insurance underwriters are sort of teeing up for agents. And that will then have a fee associated with it, probably somewhere between $70 and $150 that would be charged to the buyer. That's
Now, is that
correct.
only for a buyer who's having to report this? So a transaction that did not have to report this, will they have to assume that fee as well?
No,
Okay.
no, it's only for reporting.
Okay.
Yeah. So I think you'll see the industry. I don't think the industry is going to follow what we're doing initially. I think they're going to line up and they're going to hit a charge. And the Texas Department of Insurance has already said now it's okay if you charge for the service. So which is a good clearance for us. But eventually it's probably going to be common on a settlement statement when you're having involved with these kind of entities that are required to report.
Wow. So we see a confusion there in the future
Well,
on who has to report
it's like
this.
anything else. Once they kind of get down the road a little bit, and the thing is, it's so different as it's very unique. And Autumn could comment what percentage of overall transactions would be subject to this. My guess was it probably 10%.
It's 10 to 15% in addition to what we used to report, unless you have a niche market. So, for instance, I work primarily, or a large percentage of my transactions are investor and wholesale. So 90 to 95% of mine will actually apply.
Whoa.
Yeah.
That's a lot.
Yeah. Yeah, but the broad brush of all in the industries, let's just say it's the high side of what Autumn just said at 15%. That's 85% that continue to do business as they've been doing business, because it's Mark selling to Sandy.
Yeah.
Yeah, it's not. We don't have an entity that we have to be engaged with.
Right.
So, but and the outcome of it, if you don't report, and perhaps even incorrectly, is there's going to be fines.
Well, thank goodness that the title company can take care of it.
Right.
I mean, that's why you want a good title
Yeah,
partner.
it falls on our shoulders.
So, Autumn, what are the requirements that trigger the need to report? And I know that you've got a PDF document, so guys, don't freak out. There's plenty of written material that goes through all the details of this. It's going to be available by Secure Title. So, but just for the conversation today, what are the requirements that trigger the need to report?
The first thing that we're going to look at that's going to trigger that is whether or not the buyer is an entity, and that includes a trust. So it's either going to be a business entity like an LLC, incorporation, partnership, and it can also be a trust. can be, a family trust, a business trust, it doesn't matter, just so long as that it is an entity in itself. And so if it is that, then we have to move forward and say, okay, is that entity and or trust, are they purchasing this property utilizing AML funds, meaning are they using a institution that is anti-money laundering? So are they going to a typical bank?
Right.
Are they going to a
That
credit
has
union?
stop gaps and
Correct.
yeah.
That already is reporting based on anti-money laundering laws and suspicious activity reporting. So if they're an entity and they're not using that, then it would trigger the reporting.
Okay.
Yeah.
Okay. And what are those kinds of places that if you're an entity and you're using, I'm trying to understand all this, and you're using money
Like hard money or
whatever that's not a real bank, what would that be? What would that be?
well, there's
Am I making myself clear?
Well,
I'm
it-
not
I mean,
understanding what I'm
I think-
asking, but
It would be twofold. One is either a seller financed.
okay.
Right.
Okay. So
Or-
I'm not going through a bank. What am I
Right.
going through?
You're going through seller finance, or there's lack of available qualification for people to go to the standard mortgage route, standard banking route. So they go, okay, we'll go over here to the hard money. Well, so the standard banking or mortgage route is going to be 6% that we talked about, but the hard money is going to be 10 to 12%. So it's like you can't qualify necessarily for that loan. We got the money, but we're gonna
Right.
loan it to you at a higher rate of interest in a very short term basis as well. It's not
Right.
amortized on 20
So
years.
what if I'm an LLC and I'm coming in and buying a house cash? Does that trigger it?
yes.
Okay.
So it's cash or
I would
private
think cash
hard-
would be a lot of it.
well,
Would be in the investor side.
yeah, but you see a lot of hard money lending. And that's because a lot of times with the investor side, they're utilizing the money to carry over while they make repairs, and then they turn around and they sell the property.
Okay.
And so when you go to a hard money lender, it's generally a short-term loan at a slightly higher rate, but they also have construction costs that they can build into that loan. And then it gives them that amount of time to do what they need to fix that home up and be able to turn around and to sell it.
Wow. Okay.
Yeah.
So what is a non-financed transfer? Would
So-
that be coming with cash?
So non-finance would be anything that doesn't have a loan, or it's a hard money or private money or seller financing.
Okay.
Yeah.
Now you say that you have seen some of these in your commercial side and you've dealt with this before
Well,
in reporting.
it doesn't apply to commercial.
only
It does not.
residential.
It
Yeah,
only applies
residential.
to residential.
Okay.
And it applies to anything that's considered 1 to 4 family. So it can be a 1 to 4 family home. It can be a condo, duplex, quadplex. But it also applies to vacant land. So if you have unimproved land, that the intent is to use it for residential purposes, that is also reportable. So, and of course, there's been some concern as to whether or not, what if it's not zoned? What if it's, there's a lot of what ifs.
Right.
So our take on it is to err on the side of caution. We're going to report when there's any doubt whatsoever.
Sure.
So, because intent is very hard to prove.
Yeah. Yeah.
So if you have a piece of land that is in a residential area, even if it is not yet zoned residential, because it hasn't gone there yet, we are going to report it as possible residential use, because the intent of the buyer is very hard for us to prove. So we're going to report on the error side of caution.
So you, not in commercial, but in residential, you have seen this
Yes.
here. And so give us an example of how something like this happens and what was done to divert it. Do you have an example like that?
Do you mean as far as
Dealing with one of these that's actually been reported and they were caught, if you will, or once you report it, is it out of your hands? You don't deal
No.
with it anymore?
it's out of our
Out of our
hands?
hands.
Yeah.
Okay.
We are purely reporting and providing information only.
Okay. So you're not having to deal with the
no.
situation in any way.
No, and it doesn't, anything like that isn't triggered. We're not looking for illegal activity. We're not looking for anything like that. We are purely collecting the information that is
Okay.
required by the U.S.
Okay.
Treasury. One of the other things that we are collecting, though, that I think bears mentioning, because you asked me what was something different, and I didn't mention earlier, was one of the new things that we are doing is now we also required to source the funds. So one of the things that we have, especially if you have hard money or if it's cash, private lender, it doesn't matter. So typically when somebody buys a house, they write earnest money and option money, and they'll send that in to us, correct? And so then we have, let's say there's a private money or hard money loan, then the lender's going to send it as the money. And then like I had one yesterday where I had two entities that were buying it, and so they were sharing the cost. So half of the incoming funds for cash to close came from one buyer. The other half came from the second buyer.
Okay.
So in that instance, what we have to do is actually source the earnest money. And in this case came from an investor because then it was assigned. And so the investor that we sent us the contract, we have to source their funds, and we have to have their account number and their banking institution information. And we have to provide that to FinCEN. And then we also take the lender's money and we have to source that, what bank account, what bank it came from, and the same for the buyers. And then we have to add all of that up together. And so in the report, one of the things it's asking for is basically the consideration, the sales price of that. And then we have to add in all the funds. Now, whether it's a wire, cashier's check, or check, it's all has to be sourced. And so we have to add all that up and then report. So what they're really looking for is the amount of the consideration versus the amount that you received significantly different. Right. So are you sending the title company way more money than you should, and now we are giving you back a refund?
Oh.
Or are you giving that money to someone else and then they're paying you back, which is essentially washing the money?
And
so
that makes sense. Okay. Wow.
Yeah.
Ooh.
Well,
So-
when you think about that too, somebody that's subject to that type of information that we're requiring is going to be a little bit more apprehensive about being involved in the fraud channel.
Right.
No kidding.
Yeah, because we're requiring so much information from them.
Yeah.
You know, I don't think it's a bad thing. It's a little bit of an administrative challenge for us on that side, but on the whole, I do concur that, you know, we know what's out here. We deal with fraud issues all the time. So I don't think this is a bad deal. It's just,
you know, it's just like anything in the legal world. If they make a rule against it, that's because there's been a problem with it. So it might be that in these times that there has been an increase in that kind of crime, along with all the other crime problems that we've got with cybercrime and stuff. So I can understand
what we want to
that.
make sure of is, because what's really important for us is that we're compliant.
Yeah.
And that's really that's why Arm says once we do our reporting,
Yes.
we release, and then that's up to the government to decide what.
I mean, you want to make
is
sure that your
appropriate or
title
not.
company that's handling all of this is legit.
Oh, yeah.
And in every step along the way, because
Yes.
you don't want something to come back and hit you,
Right.
you're a realtor or broker.
Well, and you want to make sure that you're reporting because, as Mark was saying, they do have penalties. Not only do they have civil penalties, but they also have criminal penalties. And it's going to be the difference between negligent, not reporting out of negligence, or willful negligence. And so when you know you should report and you are intentionally not reporting, and so they put some teeth behind this, so it can be pretty serious if it's not reported. So it's very
Interesting.
important that we make sure that we are complying with all
Okay.
of that information.
For some additional specifics, what is an AML lender?
That's the anti-money laundering lender, somebody who is already through the Bank Secrecy Act, who is required to report and use suspicious activity reporting, SAR reports. So if they see anything that is considered to be suspicious, then they are required to report that to the government.
And so with that, why are those funds exempt?
From the AML, because they're already reporting.
Because they're already being
So
checked
for
and
them
everything.
to do it again would just be double checking the same information.
Right.
And so
Okay, cool.
they're trying not to create double work for them, of course. And so
So that we make the assumption that if they're reporting, we don't have to report.
that's correct.
Okay.
Yeah.
All right.
So and typical banks and credit unions and that one thing that would qualify under those.
Okay. So that's why in the beginning, when you said if it's from a legit banking source, then usually that's not going to be a problem.
Right. And when I say legit, I just mean that it is a bank or a credit union, somebody who's FDIC insured or credit union
Right.
that's insured, somebody who's who's overseen by government regulations already, as opposed to a private money, hard money, who is not overseen by the federal government, by the Treasury, and the things that they do as far as banking is concerned. So it's just covering the difference for those that are not already reporting.
Okay.
Yeah.
So this isn't something that's hidden and not out to the public. As I understand, there is a website where you can go to learn more about this.
You can. And we actually have informational graphics that we can give out to real estate agents so that they understand how to have the conversation with their clients, with their buyers and their sellers. We also have information so that when you do have that conversation with them, it's like a flow chart, basically. Does this apply to me? And it's very much a yes, no sort of tree, and it's very easy to go through. And so we have all that information. It was provided by the U.S. Treasury. But if they want to go and get very deep into it, they can actually go to FinCEN.gov, and they can get that information directly, from that website. But we have all that information. If they don't want to go diving through the internet to find it, they can come back and get it from
Secure
us.
Title can be the source for information on this.
Yes.
To brokers and other title companies and things. So how are you guys going to handle this new reporting requirement? And is it different for you? Have you already been doing this?
Yes.
Or do you have to build in something new to what you do?
Well, we've already been doing it. When we had geographic targeting orders, it was just on a smaller scale.
Right.
And we still had the reporting. It was just the report looked different.
Yeah.
And so now we are doing it, and we started March 1st, and we've already, it was anything that closed March 1st and beyond has to be reported. And so we've already started reporting. We are not using a third-party vendor. As I said, we're doing that now. We're filling out the reporting.
Okay.
And I'm submitting the reports for the company because I have they have the authorization to do so through BSA or the FinCEN website. And so actually everybody was very concerned that this was going to be very time consuming and it was going to be very difficult.
I would think so.
But what I have found actually is the majority of the information that we have collected for this, we've already collected as a title company. So we're already collecting corporate documents, EIN numbers. We're already vetting the people who are beneficial owners who are going to be signing on behalf of the company. And so we're already getting the information. So basically, the only thing that's additional that we were not doing before was getting, for instance, there's a difference between a beneficial owner and just a signing authority. So, for instance, I work for Secured Title, but I don't own Secured Title. The Stoffers would, I think, take exception to that. But I'm a signing individual for the company. So you would get my information, but I wouldn't have to give you as much if I wasn't a beneficial owner. So let's say you have a company that has a sole owner, or maybe it's two owners. Then I would get their social security number and their information. But on occasion, you have companies that have nested corporations. So, for instance, if you have an LLC that's being purchased and their managing partner or member is an LLC or a corporation, and you just keep going back, we are required to keep going up that chain until we actually reach a person who is a beneficial owner, and then we have to get their information. So we weren't getting their personal social security numbers, which I think is the one change. That is different that we haven't been collecting before, but also the sourcing of funds. We were not gathering account information and we were not sourcing the funds. So really all the information that we're collecting, we've already collected in the past. We just didn't put it into report format, with the exception of sourcing funds and on businesses getting personal information down to beneficial owners, because it applies to anybody who's 25% or more beneficial owner.
So that's a good thing. You're already used to doing this. It sounds like this is pretty much landing on your desk.
Yeah. And I will actually say, I mean, and kudos to them, actually. The report that they did actually is interactive. It's very easy. So we've actually taken to sending the report, letting them fill out what they can, and then sending it back to us, and we marry them together.
Good.
And then within the report, we can finalize, validate, and file right from that same report. So really and truly, they've streamlined it quite a bit. And so it's made it much easier than I anticipated based on some of the feedback that we had gotten before it rolled out. And so right now, I think it's actually going quite well. So unless volume just gets crazy, I don't think it's going to be as terrible as some people were thinking.
So what you had said earlier, the title company is responsible to do this, but you had also mentioned that they got a little heavy on some of the fines and the effects if you don't do it. Is there a risk to the realtor or the homeowner, the seller or the buyer if this is not reported correctly?
It could, only if they willfully kept information from us
Okay.
that would require it to be reported.
Okay.
Mm-hmm.
And in those cases, we'd probably stop the closing
Yes.
if we didn't have the
Yeah.
information.
Yes.
Because then reporting in is not going to be accurate, and then we'd be subject to fine. Initially, when we rolled these out, they were talking about $500,000 per error.
Right.
I think they've adjusted their thinking a little bit on that, but
Yeah.
there would be some fine. So best thing to do is we don't have what we need. We just need to stop the press.
Yeah.
all
And
time.
I know y'all would do that.
Oh yeah.
Well, and
Yeah.
as far as our title commitment is concerned, it is one of our requirements that we have all of this information
Yeah.
prior to closing.
Yeah.
So if we don't have this information, we don't even get to the closing table.
Mhm.
It's one of the ways that we're mitigating chasing people after the fact and possibly not having the information that we need to report. And in fact, FinCEN says if you don't have this information, you can't close. So
Okay.
we've just brought that into our own policies and procedures.
Okay, good. Well, yet another requirement, yet another piece of paper that has to be completed. But good thing is you don't have to understand it. You're going to let them understand it. We're out of time, but I want to just wrap up the next couple of minutes with on a positive note. And I'd like for you, Mark, to just tell us, where is this market right now? And where is it going? We're in March. My God, first quarter is almost over.
Right.
And we're moving into second quarter. And Dallas has always had such a resilient real estate market. So in case we don't see you for a couple of months, where are we headed?
Well, I sat in a couple of weeks ago at my Dallas Roundtable, a report by the DFW Regional Chamber. And the amount of information they gave us, there's 120 people a day moving into the Metroplex. There's 1,200 people a day moving into Texas.
1,200?
1,200 a day moving into Texas. So all that being said, and nothing's slowing down. If you ask me what I think 2026 will look like, I think it'll look similar to 2025. I don't think so. That's going to be, if we just stayed on par and we had the best year we had in 2025, we're going to have another good year.
Okay.
But I don't see any major climbs. I don't see
Right.
any significant reductions in interest rates.
So we're stable.
We're just kind of stay
Yeah,
there. You
and
might
that's what
see
I've been
some,
seeing in the marketing
price
side.
adjustments down, but that doesn't mean the market's softening.
You
It's
think
just,
mortgage rates are going to go lower?
I think you won't see more. If mortgage rates get to 5.5 this year, I'd be pleased and surprised. They're not going to go. We're never going to see the rates that we saw at one time. If we could get to 5 and a stabilized mortgage environment, I think it'd really stimulate sales out
I
there.
think it would too.
As
And
well,
refi.
and the buyers.
Yeah,
we
yeah.
still got that issue that the average new home buyer is 40 years of age.
Yeah.
So where's the market to the young 20s to 35 years of age? That's there.
Are you seeing them get into the market yet?
Not really. I mean,
Still, it's
because
about
you
the
still
same.
got, unless mom and dad can help them out.
Yeah, they can't afford to get into
You
the
know,
market right now.
Medium home price,
Yeah, man,
$500,000
how somebody
bucks.
buys a home right now for the
Right.
first
And then
time.
you got, forget about just buying and getting the mortgage rate. Then you've got taxes, insurance, P&I. It's a pretty good bite unless you're really sound in your professional career.
Yeah.
It's a challenge to that. And so anyhow, but DFW has always been in some forms recession proof, in my opinion.
That's why they're still coming in.
Yeah, and they're still relocating here, and
Right.
and so we're in a really good spot comparatively to the rest of the country. And I was really impressed with the DFW Chamber and what they've accomplished,
Really?
and the corporations they're attracting, and they're out there nationally traveling and pitching the Metroplex, and they're doing it successfully. So we're going to see more and more companies relocate to the Texas
Well,
marketplace.
go Dallas.
Go Dallas. Go get them. So,
Guys, thanks so much, Autumn. It was a pleasure to have you.
Thanks for
Your
having me.
knowledge is just incredible. Go to securedtitletx.com and reach out to Autumn or Mark to get these documents to help you understand FinCEN. And thank you again for all the good information, Mark.
Thanks, Sandy.
Take
It's-
care, and I'll see you next
all right.
time.
Ciao.
All right, ciao.
All right. All right.